the answer to the question, what is Bitcoin's rate, is not that straightforward, right? And there is no like universally referenced benchmark that people can use. And if you think about it, then probably in terms of the liquidity, the importance, the impact of the trade on people's portfolios, it's not going to be something like lending rate on Aave, no disrespect to Aave, right? But really what matters to people is, for example, the funding rate on Binance. So when you trade your Bitcoin on Binance, whether you're using perps to go along with leverage, or you're using it because you, for example, run some kind of a basis trade and you collect funding payments while hedging out your Bitcoin price, that is sort of what 50% of people in crypto are doing on a daily basis, and that's the rate that matters.
None of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Ryvkin Ventures or any of its affiliates to buy or sell any securities.
Hey, Ryvkin family. Excited to have Alex Ryvkin, CEO and co-founder of Rho Labs, the first crypto-native interest rates exchange. For anyone who is new, this is the Ryvkin Ventures podcast, where we do snapshots with interesting builders and founders across AI and crypto. Check out ryvkinventures.io to learn more about the syndicate behind the podcast. We're going to jump right in with Alex. Hey, Alex, thanks for joining the show.
Hey, Benga, thank you very much for having me.
Definitely. You have a storied career over a decade in capital markets and fintech. Certainly, your newest project in crypto is not your first rodeo. So tell us, how did this all begin? What's your career journey leading into crypto?
Yeah. I caught a bug probably around about 2015, 2016. I was working in finance. I started in equity sales trading and progressed to derivative structuring. So worked on a whole bunch of complex notes and strategies for private banking, for corporate treasuries, for just different solutions with basically all the available instruments. And then got to know about Bitcoin quite early on, but unfortunately wasn't smart enough to peek into that in the early days. But around about 2015, 2016, Ethereum was launching, the kind of the first sprouts of the future ICO boom coming on the scene. And I ended up launching my first startup, getting out of finance in 2016 and launching my first startup, which was already around decentralization of finance. And we started looking into crypto as an asset class. And by the time I was running the next project in the early 2018, in the aftermath of the ICO boom, the much calmer kind of professionalizing markets, that's where when I was running the first project purely related to crypto, and basically since then for the past 5-6 years, actually more right now, I've never left and not looking to anytime soon.
Yeah, that's pretty fascinating. And you've channeled all of that and moved into marrying, I guess, the financial services with crypto and unlocking what, a lot of the efficiencies that crypto can bring to this. But before we even dive into any of that, help us define what crypto native interest rate derivatives mean.
Sure. So interest rate derivatives on its own, forget crypto native for a second, is sort of a best kept secret than TradFi. It's not a secret for anybody like yourself who's coming from the professional capital markets background. But for an average, normal kind of individual retail trader, they might have never looked at rates as something that can be traded. It actually happens to be the single largest asset class in traditional capital markets in terms of outstanding interest. Or funny numbers, like $500 trillion, literally, in open interest in these instruments at any given point in time. The reason for that is, I think by now everybody understands how impactful the rate changes are, because everybody, whether you're a bond manager for like a $10 billion fund at PIMCO, or you just happen to have a floating rate mortgage, you're impacted by the rates decisions of your country's central bank or the Fed. And these interest rate derivatives, or like sometimes people just say trading rates rather than this word salad of interest rate derivatives, but essentially these instruments are the most capital efficient, the easiest, the cheapest, the most advanced way to manage these risks. Or if you have a certain view, if you think you understand where the market is going to go a little bit better than the rest of us, then you can actually use it as a profit opportunity. And on one end, you've got a lot of for example, corporates or somebody with a longer kind of risk horizon, people who care about this rate impact, hedging their risks. And on the other hand, pretty much every hedge fund in the world is trading rates for profit. And when you add crypto native component to it, then you can look at what happened to us over the course of the past 5 years, over the past cycle. So if you look like 5 years ago in 2020, before DeFi summer 2020, for example, we barely had any significantly meaningful rate products or rates generally in crypto. DeFi lending was basically limited to Aave, maybe ETH at the time, and a couple of other primitives. Staking was not really a big thing. We all knew about proof of stake, but before Ethereum went proof of stake, it was not really a big deal. Perp trading launched in round about that time, and so it was not as popular as it is today. It was not such an overwhelmingly popular derivative asset class in crypto. So we had rates, but nobody looked at that as an asset class, and the rate impact on any individual investor's portfolio wasn't that profound for people to pay attention. Now the situation is entirely different. Ethereum is proof of stake. We got staking. We've got ETFs, Ethereum ETFs coming in, possibly with a staking component if the regulation permits. So that becomes that's a rate for you, which becomes table stakes for traditional investors. Funding rates on perpetual futures are overwhelmingly very volatile, very impactful, very important for any investor's portfolio. You've got lending, centralized, decentralized, which is rising from the ashes again in the aftermath of the previous cycle's debacle. And now we're also in the world where really it's not 100x or nothing play anymore as it used to be at that kind of back in the days in the ICO era at the time. So we still have abnormal returns in crypto, but they're not that abnormal. And suddenly people care about extra 5%, 10% impact on their portfolio. So hedging becomes a thing. And the traditional strategies do not always yield the same outcome, the very basic things that everybody has been doing. And people are looking for the new ways to make money. And this is the asset class which offers this kind of well-known ways to make money, but the ones which are not yet present in crypto. So that's sort of what we're doing. We're allowing people to trade rates as a separate asset class and to both combine it with other things they're doing in their portfolio or run that as an independent strategy or independent source of income.
Yeah, and thank you for breaking that down. I might believe the outstanding interest for interest rate right now for interest rate derivatives right now is about 500 trillion. So it's a massive market, easily the largest asset class in traditional finance. So how does this all tie into your project? Talk to us about Rho and how you're building the future of crypto native interest rate derivatives as an asset class.
Sure. So we launched about 2 years ago, and our first idea, we were looking for the right type of rate that would be interesting for people to trade. We're coming from the TradFi background ourselves, but crypto market structure is different. And I think some of the people who looked at rates as an asset class before, because in TradFi, it's predominantly driven by hedging in the beginning. People thought of these products as hedging products. So, for example, I can choose some kind of a fixed notional and some kind of a fixed rate and make sure that I'm going to be paying not the floating rate on my loan, but a fixed rate. Like, very simple idea. And because of that, the products didn't always have secondary liquidity and were not always fitting for crypto audience, which is more keen on active trading, more keen on market neutral strategies, on arbitrage, on various other applications. So what we decided to do, first of all, we launched this as an exchange. So we at Rho Labs are building Rho protocol, and that is an interest rates exchange. If you look at our product, if you've ever seen a crypto exchange, or definitely if you've seen like a perps exchange, you would know exactly what's going on. It will look like an exchange. The only difference is going to be, instead of trading a Bitcoin price, if you're trading the perp, you're trading, for example, a funding rate on Bitcoin perps on Binance, or you're trading a staking rate on Ethereum, or you're trading a staking rate on Lido, or anything else. Anything with a kind of percentage sign on the end can be potentially traded on Rho. What we found most interesting, for some reason, which is in a way puzzling for us, we were the first project that decided that specifically funding rates, to the best of our knowledge, we were the first project who decided that the funding rates for perpetual futures is actually the most interesting components of that rate ecosystem in crypto. And the right answer everybody sort of knows what's the US dollar rate is today. It's the Fed rate if you're talking cash, or like something else if you're talking securities.
Right.
The answer to the question, what is Bitcoin's rate, is not that straightforward, right? And there is no like universally referenced benchmark that people can use. And if you think about it, then probably in terms of the liquidity, the importance, the impact of the trade on people's portfolios, it's not going to be something like lending rate on Aave, no disrespect to Aave, right? But really what matters to people is, for example, the funding rate on Binance. So when you trade your Bitcoin on Binance, whether you're using perps to go along with leverage, or you're using it because you, for example, run some kind of a basis trade and you collect funding payments while hedging out your Bitcoin price, that is sort of what 50% of people in crypto are doing on a daily basis. And that's the rate that matters. So we launched the exchange, which allows you to trade perpetual future funding rates as the first product on major centralized exchanges. So currently we have products for Binance, OKX, Bybit. We're also working on Deribit. We're working on some others. And of course, we're also interested in everything happening on chain. So we're looking at DYDX, Hyperliquid, and all of the others. And that will enable anybody to essentially either hedge those risks, hedge the risks of overpaying funding or under receiving funding if you're on the receiving end of it. Or if, again, there are plenty of people in crypto who understand funding rates really well, and either they're already running some kind of funding arbitrage, or they're using some prediction models to understand where the rates are likely to go. That's, again, the way to extract some additional profit and make this market a little bit more efficient for everybody. Because right now, funding rates are super volatile, partially because of the absence of a product like ours, which would make it a little bit more efficient and a little bit smoother.
Yeah, thank you so much for that background and context. Definitely really interesting. And if you can just unpack a bit more there and talk about the features you're using to and the tech they're using to enhance access to this emerging asset class. It's really interesting. You listening to you talk about like the funding rate and the Bitcoin funding rate and how you're finding the right product that will appeal to a lot of the users, but also want to help our audience understand how your features are making that happen.
Sure. I think that the most important thing for anything crypto related, as we all know, is user experience, right? So we really try to make sure that anybody who is familiar with crypto trading, beyond just sort of buying and selling Bitcoin from their wallet, if you open our interface, you will know exactly what's going on. Rates are quite technical in TradFi, but eventually it all boils down to the same sort of set of choices. So do you think this particular asset, do you think this number, like does the number go up? Do you think this number will go up or down? If the number goes up, you go long. If the number goes down, you think the number is going to go down, you can go short. In the same way, you can go much, much, much more technical into that. And for example, if you're running some complex hedging strategies, we got tools for that as well. And we're building even more tools that will simplify people understanding of the asset class, simplify the forecasting of their P&L and understanding how the portfolio, how this particular trade will do in different market scenarios. But the most important thing, like step one, because this is a new asset class, this is not something people are very familiar with. For us, it was super important to make sure that anybody who opens that interface will know exactly what's going on. We're not asking them to come in with any kind of knowledge about rates trading, aside from some very basic understanding of what it is and where it comes from. And of course, you need to know what funding rate of a perpetual future is, but that's sort of public knowledge, and there are like kilometers of documentation written on that on centralized exchanges. So that's one important thing. We're also working on a bunch of products which we'll announce eventually, which will simplify that even more. So normally the way we talk about it is take TradFi as a proxy. If anybody who ever got a fixed rate mortgage bought themselves an interest rate swap, because the bank lends them for 20 years and the bank doesn't really have a lot of borrowing facilities to borrow from for 20 years and the rates fluctuate. So the bank has to hedge that difference. And therefore, bank will trade that for you. So you will, of course, pay for it because they will include it into your rate. But you will essentially trade an interest rate swap without even knowing it. And I think that's eventually how we prefer to think about products, generally trading products and specifically our products in the context of crypto. So we want to make sure that whether you go to a staking provider, you go to your exchange, you go to your lender or anything you're using, you do not need to know that somewhere on the back end of it, you might be trading an interest rate swap. Composability is super important, so we can make sure that you can just say, I want a fixed rate on that, for example, or I think the rates are going to go up and I want to make a trade. And you can basically do it without even knowing that you're trading some kind of complex financial instruments on the back of it. That will take a little bit of time, but that's the direction we're looking.
That's pretty cool.
Hey everybody, quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Let's get back to the show.
I think many of us don't even know that our everyday lives is one way or the other tied to this market that seems like it's somewhere in the cloud. And so for those folks who want to get closer and engaging it through your platform, to your point, the UI UX is sort of like key. It's been very intentional how you've built it and sort of how intuitive it is. I've seen the platform. And I was just curious, like what challenges you faced in sort of building the product out, not just from a UI perspective, but everything else that comes together to make the sausage, as they say.
Oh, well, for starters, we filed for the registration of the company about 1 week before FTX.
Oh, wow.
Yeah, my timing wasn't great in that one in that sense, but of course they say that the products that manage to survive that type of the market typically the most resilient. So let's hope we can fall on the same side of that stuff. And then we were raising our pre-seed, and we were very lucky to raise a pre-seed round with a set of very strong investors. One of the strongest fintech investor in Europe, Bidinvest, led our rounds, and they were not even Web3 native. They were more general fintech investor going broadly, and they understand finance, they understand the problems of these products. So they decided to lead our round in the middle of 2023. I think we were probably, at the time, we were maybe one of 3 new DeFi projects that managed to raise the money. So we went through a bit of a grind to get that done. And then obviously the product itself is not it is not the simplest thing to build. And you need the specialist finance knowledge, which our team possesses, thankfully. And also the tech should be very robust, right? So we actually took quite a bit of time between the initial build out and the launch eventually. We launched the product in closed beta in June 2024. And we were very careful and cautious with it. And we only launched after we passed the initial security audits and after we validated in our alpha version, validated a lot of assumptions on the models that we have. And we only launched it to users when we were absolutely confident that the product is secure and serves the purpose exactly the way it should. And I think one of the reasons why this asset class hasn't really been popularized in crypto before is because it's really not that straightforward. You got to tick a lot of boxes in terms of the expertise your team has. And we will continue doing that going forward, right? So every product we're launching, every new feature goes through very robust set of tests before we actually decide that it's ready for the prime time.
Yeah, it's interesting you mentioned raising in the middle of all that, mess after FTX. Speed Invest came in really strongly. I remember reading one of their comments at the time when, they were just really focused more on the technology, the fact that, the interest rates market is massive, probably one of the largest markets in the world. And so it was a smart investment. And, we're certainly beginning to see it all play out now that we're in a bull cycle and in a market that is more appreciative of what crypto can do and the efficiency that it brings to finance. So, congrats on that. I'm sure, it's all up from this point forward. I'm going to just jump into the more fun stuff here before our time is up. But, where are you seeing opportunities for investors and traders in this space?
Oh, I think like everybody, we are recording that podcast a little bit before the inauguration of the next president of the United States. Of course, everybody's hopes are really high. And I think the biggest impact that we may have is actually consumer apps in US app stores, with some of the use cases which will hopefully be a little bit more robust than what we've seen in the previous cycle. And so people who are now building those products are a little bit more risk aware. And I don't think the market has any more appetite for another Celsius or another 3 Arrows capital. Neither the market nor the regulators will allow that. So I think that the opportunity is, hopefully, if things go the way we expect them to, we probably going to see the continuation of the bull run. Everybody's talking about various applications, and there are certain things which are very hyped, like crypto plus AI and some of the others. But even on the very basic applications, investments, trading, lending, yield, I think there are still so many unexplored opportunities. And a lot of primitives like ours, what we're bringing into crypto right now is not necessarily new outside of crypto. This asset class was in existence for dozens of years. But more and more people like us will come in and form the puzzle, the remaining pieces of the puzzle for institutional investors, for professional traders, for corporates to come in full force. And I think for anybody who has enough oxygen and believe in the ecosystem from, the early days, I think now we hopefully will finally see even higher potential payoffs and hopefully more sustainable than in the previous kind of boom and bust cycles that we've experienced over the past 5 to 10 years.
Speaking about boom and bust cycles, another cycle that everyone's been watching closely and is really tied to this market is the macro view on the interest rate environment. There's a general sense that most of the world is moving into a lower interest rate environment. Is this something that you guys are closely watching? I mean, what trends are you seeing coming out of this, and how is Rho preparing for it?
Oh, I think this is one of the most exciting things for us because rates seem to be boring in TradFi for a while until they're not. So typically, if you look at TradFi rates markets, they're very stable for a decade. And then the volatility goes completely out of whack and it reshapes the whole kind of financial world, right? So let's imagine, for the sake of the argument, right now we're in this high interest rate environment. And somebody like Tether, who basically can collect your cash and put it into the US Treasuries and not share a lot of those profits with you, is one of the most profitable companies in the world with few dozens of employees, which is like a completely new business model not available outside of crypto. So these guys got really lucky. And now everybody's trying to replicate this success now with yield-bearing stablecoins. Like stablecoins have been one of the biggest, like, ubiquitous use cases. And I think one of our partners has recently published an article saying that we're probably going to see something like $500 billion in stable coins by the end of 2025 or even by the middle of 2025. Now, if you imagine that those rates that somebody like Tether or other stablecoin issuers that they earn by investing in TradFi securities will go down from 5% back to sub 1%, for example, for the sake of the argument. It might take time, but if that happens, that suddenly today you do not see a lot of interest to something like Ethereum staking yield, which sits at around about 3.5%. But in the world where the TradFi rates are again below that number, suddenly that becomes interesting. What does it mean for the stability of the Ethereum ecosystem? What does it mean for actual rates, for the actual staking rates on Ethereum and on other proof of stake protocols? These things are really hard to predict, but one thing you can do is you can position yourself towards that using various means, including instruments like ours. So if you think there's going to be some impact on Ethereum staking rate, or you think there's going to be some impact on some of the stable coin rates, you can always hedge yourself against those moves if they're impactful for you, or you can position yourself long or short to potentially make some money on it. That's one of the more exciting use cases. And I think this is what's going potentially to drive interest for longer term contracts in rates trading. Because today, majority of our instruments, the most popular instruments for us, with monthly instruments essentially. So something that expires at the end of each month. And we are already getting some interest from clients and investors for 6 months, for 12 months instruments, specifically because people are trying to position themselves against that type of risk throughout the year, for example, to the beginning of 2026, which is like super exciting for us to see that in crypto, which by definition has always been very short-term thinking. It's great that this is happening to us now.
Yeah, that's actually pretty interesting because I was just going to talk about like what your roadmap is looking at. Like that actually kind of feels like as you see the demand, you start to create products to meet that demand. So, what is that product roadmap looking like? Is it largely user driven, or are there other things that you're thinking of just as the crypto market continues to mature and sort of run in parallel with the TradFi markets and products?
Oh, we're absolutely in a sense of what drives our product decisions. With my kind of product background, we always talk about it internally that our methodology is customer driven development. So we always try to test all our ideas and our thinking against the real potential clients, the real market. And we do not build anything that has not been pretty much anything. I think 90% of our ideas has come out of our conversations with prospective clients or some kind of feedback on the product that we had or something like that. So with that, we got to come up with a whole bunch of announcements over the course of Q1 because we've been working a lot of things. We've been writing for a couple of years. There are lots of things we've built but haven't launched yet because we didn't think the timing is right or we were not positioned in the right way. And now we think we're there. And there are lots of things, and that includes the kind of extensions of the same products or the same product families. Like, for example, right now you can trade Binance and OKX rates. As I mentioned before, we got Bybit already on testnet, so the trading is going to go live soon. There are going to be other exchanges, and that's within the rates trading. There are going to be other families of rates. Like, for example, we've actually built some lending rates, the likes of on-chain and off-chain lending, be that Aave or Compound, or some other lending rates from other venues when it happens on-chain or off-chain, which is also going to have its own kind of set of applications. And we're also working on completely different families of products, which will cater to different sides of crypto audiences and always will have a rates component to it because rates are ubiquitous to a lot of complex strategies. You cannot really run them in a reliable and like risk aware way without having this liquid rates market somewhere on the back of it. So we have it, and that's the foundation of everything we're working on. But we're also thinking about different applications and use cases for people who are either more sophisticated or less sophisticated and maybe want to spend less time analyzing the charts and just want to get some benefits of being able to trade this asset class in some other ways. So at this point, I have to say stay tuned because we're going to come up with a new announcement at least every month. And that's going to be quite exciting. Unfortunately, some of it I cannot disclose right now. I wish I should have been better prepared for that, but there's going to be a lot of stuff happening.
No, that's not an issue at all. I really like your approach in sort of just thinking about the user, whether it's from how you're building your products to your UI to even just, the learning curve of trading and derivatives trading, because it also looks like your feature set includes sort of like folks who are just coming into the space, and then folks who are true professionals who care about the charts, who care about the more detailed analysis on trading analytics. So I'm sure that we'll continue to see more exciting stuff come out of there. So broadly, actually your take and from like what's going on with interest rates, but from a crypto market outlook for 2025, we're seeing a bit of catalysts there, whether it's the incoming administration, President-elect Trump's friendly and forward stance on crypto. We're seeing regulations not just in the U.S. potentially becoming more innovation forward. We're seeing that happen in many parts of the world as well for a product that is pretty globally traded. What does that mean for crypto markets for 2025?
We can only hope that some of the things that we're not able to do due to the previous administration's rather adversarial stance on crypto will now become possible, as I mentioned before, and that should drive some attention and drive some adoption. And that's what crypto has benefited the most through every cycle. I think, generally speaking, it's hard to imagine that on the regulatory front, things are going to get much worse than they used to be before. So in terms of that sort of risk premium, it should go away. And I personally believe that it didn't, even though we had a bit of a rally after the last election. I don't think it's fully priced in because market is still a little bit wary of inauguration and nominations being approved. And actually, like we've seen a lot of promises before and we want to see some action. But it's really hard to imagine that it's going to get much worse than the previous cycle. So hopefully that has not yet been priced in. There could be some macro pictures a little bit probably less rosy, and we have some global conflicts and we have some other things which may result in some adversarial events, not just for crypto, but generally for all the risk assets, including equities and commodities and some of the other things. But hopefully, aside from that, it's really hard to imagine that 25 would not be a positive year for crypto. And maybe we're not going to see, I'm not entirely certain if the structure of the cycle is going to be the same when we first see some kind of growth in Bitcoin, then Ethereum, and then altcoins. It seems from where we stand today that we're possibly looking at a Bitcoin cycle in a way. Ethereum hasn't yet taken off. Solana has been crushing it. Some of the other assets have been, Sui have been crushing it. Mm-hmm. So probably we're going to see some significant improvements, hopefully, in adoption in some of those alternative chains. But whether we're going to see like a full-on altcoin season, I don't know. Generally speaking, for the ecosystem, for kind of a diversified portfolio of crypto assets, really hard to imagine this not being a great year for crypto.
Great year for crypto. Absolutely. Two final thoughts before we wrap up here. One, we've had a few folks come on the show and talk about the continuing growth of AI and crypto and a lot of development in that space. Just any thoughts from you on, how you see that intertwining, whether it's AI agents and AI bots, doing more in crypto trading as well. And then finally, would love to hear what else in crypto excites you outside of interest rates trading.
Sure. Well, let's actually start from the second one. What else excites me outside of the crypto, interest rates trading? I think I'm always biased towards finance and trading because that's my background. I've never caught like the NFT bug or any of those. I still think that the DeFi more broadly is the most kind of logical application of crypto. But even though I'm in the capital market side of it, I'm actually very excited about the payments applications. And I think, again, regulatory stance of central banks in various countries have been a massive blocker, the kind of roadblock in further adoption of stable coins. But despite that, I think we've seen how many individuals and businesses are using stable coins specifically and crypto more broadly as just a general transaction payment instruments, cross-border payment instruments, more and more at scale. And it became just yet another way to pay your counterparty or remittances for your like families abroad, despite all those hurdles, which only proves how obvious of a use case that is, right? How obvious of a use case that is. And if the regulatory pressures go away and the infrastructure catches up on the bank side and other financial institutions side, I think we could potentially see a massive boost in adoption of stable coins and crypto as payment instruments. On the rest of it, I really do not know. And specifically on the AI side of things, I'm as excited about being able to use ChatGPT and AI agents as the next guy, but I'm also old enough to know that not every exciting application is necessarily a sustainable business model. So I'm equally, as everybody else, I'm completely wowed by yet another demo from OpenAI, the next version of ChatGPT, or some of the things people are able to do in half an hour using a bunch of AI tools. This is like super exciting and this is super interesting for me. And as a kind of a techie, as a geek, but whether or not it's a sustainable, scalable business model, any of that, that includes some of the applications of intersections of crypto and AI, that remains to be seen. And the only way to find out is actually to try to build it and convince first investors and then your clients that is something that can actually scale. I keep an eye on that. But if you would ask me today, are there any AI projects, crypto AI projects that you're especially excited about? I wouldn't be able to tell you because I really don't know. I want to see how that plays out.
Yeah, you're basically saying let's not get into another crypto hype and that just goes bust, or and everything that glitters is not gold. So um,
Something like that, yeah. Let's not get ahead of ourselves. It's all very exciting, but I think nobody knows, right?
yeah,
And it's great that we are in this space, which allows you this sort of fast experimentation with a lot of people who can back your product and give you an opportunity to try something new. And that's really cool, and I'm really excited about it. I just do not know how it's going to play out. I want to see.
yeah, fair enough, fair enough. Well, Alex, thank you so much for your time. I really appreciate you coming on, and we'll look forward to seeing amazing stuff coming out of Rho Labs.
Appreciate your time, Ben. Thanks for having us. Thanks for this opportunity.
Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations from the most interesting founders, builders, and investors from across the world. Thanks so much and have a good one.